So a couple months back during the banking crisis, I watched a Rob Berger video which basically asked the question, what happens to our investment if Schwab, Fidelity, or Vanguard collapse? Now, Rob did a great job of going into Schwab, but he didn't really go into detail about Vanguard. And there are a lot of Vanguard investors out there, around 30 million. So in this video, I wanted to ask the question to ChatGPT. What happens if Vanguard collapsed? Now, I know this sounds all very doom and gloom, but there is hope because BlackRock, Fidelity, and Vanguard, they're all positioning themselves. How BlackRock and Fidelity are positioning themselves is by applying for the Bitcoin ETF. Now, Vanguard, in the same sense, they're not investing in a Bitcoin ETF like BlackRock and Fidelity are, but they are investing in crypto. And if you want to know how they're investing in crypto, please be sure to check out my next video on Bitcoin mining versus Bitcoin ETF. I'm going to tell you which one of those is the real scam. So what happens if Vanguard collapses? Well, ChatGPT really gave me 5 consequences. Number 1 is investment losses. Believe it or not, I was surprised when I found out too, but Vanguard has assets under management worth $8.1 trillion, and that is with a T. And that money basically comes from individuals, institutions, and retirement accounts. So what ChatGPT said is if Vanguard collapses, you're gonna lose everything. But I don't really think that is entirely correct. So I think that after this video, you have to watch my If JP Morgan Fails, What Happens to JEPI? Because in doing that video, I learned a lot about ETFs. Mainly that you can see them structured as standalone trusts or standalone companies. That means that the only way they fail is if the companies that they hold are badly managed and the companies themselves fail. So an ETF is basically holding a lot of companies and it only fails when those companies fail. So when a lot of ETFs fail, that means that a lot of the companies of those ETFs are failing. And in that case, and that case only, when I see Vanguard actually failing. And the chances of that happening, I really think is like 0.00001%. Basically, I don't think it can happen. So the second consequence is market disruption. Now, I don't know if you know, but Vanguard is the second biggest institutional investor by AUM after BlackRock. And the collapse will involve its investors, which are also its owners, sell off all of their holdings of Vanguard ETFs. Now, I recently started watching or reading The Bogle Effect by Eric Balchunas. And I learned that the Vanguard owners are actually their clients. So that means that if you hold a Vanguard fund or you're part of the people that hold the units of a Vanguard fund, then you are actually its owner. And the game theory here is that in the case of a huge gigantic sell-off, there will always be people willing to buy your part of the company for dirt cheap. And I'm one of them because I know that cash is trash. So number 3 is confidence and trust. Now, in the same book, I learned that Vanguard was actually getting $1 billion per day of investor inflow. That means that they were making $1 billion per day that investors are putting money into Vanguard. It's bonkers, but that is how much investors trust them. And let me tell you this, apparently Vanguard is getting more inflows than BlackRock themselves, which is number 1 on the institutional investor list. So what I think is that if Vanguard collapses, that means that all of the other institutional investors, they have all collapsed as well, including BlackRock. And if that happens, then we don't have to think about anything anymore because we'll be back in the Stone Age and we'll be doing trade by stones and pebbles. So the more I comb through ChatGPT responses, the more that I realize when it comes to game theory, ChatGPT is severely lacking because for number 4, it gave me regulation. And if Vanguard collapses, regulations just won't exist, plain and simple, because the too big to fail firms like BlackRock, Vanguard, Fidelity, if they fail, that will signify the end of the financial market. And at that point, what we should be worrying about are riots and fights because nobody will ever trust a centralized currency again. So job losses and economic impact, that is the 5th point. Remember what I said earlier, ETFs own the companies, and if the companies fail, that is when the ETFs fails. But before the companies fail, they actually start laying people off. And all that means that things will end up like the dark side of California. But all jokes aside, the game theory basically tells me that if that happens, there will be no employers. There's just gonna be war. So the good thing is that if Vanguard collapses, that will mean the end of the world and back to the Stone Age. Wait, that's a good thing? Well, yeah, because no matter how much we think our politicians are corrupted, I don't think that humanity as a whole, investors like you and I, Vanguard investors who trust Vanguard, will let that happen. So Vanguard is the last bastion. So in addition to that, although Vanguard isn't investing in a Bitcoin ETF like BlackRock, they are invested in Bitcoin. And if you want to know more about that, please check out my Bitcoin mining versus Bitcoin ETF video if you're interested in more game theory like we went through in this video. Now, as for Vanguard collapsing, it's not happening. Even if the US collapses, Vanguard can still stand alone by just moving to another country. That's what I think anyways. What do you think? Let me know in the comments below, and I'll see you in the next video.